Okay, so if you see the screen, you realize that when you bring the title, you first begin with the gross profit or loss you determine from the trading account. Okay, and then you add on the income, the other income we spoke about, like the discount received, income on investment, rent received, commission received, etc. So when you add them to the gross profit or gross loss, you get the total income. And then you now compare with your total expenses. So the expenses that we listed, you sum all of them up and push it under. So in the profit and loss account, it's only your income versus your expenses, right? Okay. So let's take the first illustration. Okay. So this is the first example that I want to look at. I think Prof. Frank, you do as the honors by reading the question for us. Okay, so we are listening.
Okay. The following is the trial balance of Pencil Enterprise for the year ended 31st December 2002. Stock at 1st January 2002, 5,000. Purchases, purchases, 2,000. Sales, 9,000. Rent, 600. Wages, 120 naira. Telephone expense, 260 naira. Carriage inward, 150 naira. Interest on loan, 100. Premises, 9,000 naira. Shop fittings, 8,000 naira. Debtors, 1,500 naira. Carriage outwards, 180 naira. Bank, 2,050 naira. Cash, 1,150. Capital, 11,130 naira. Drawings, 1,000 naira. Loan from bank, 10,000 naira. Creditors, 950 naira. Returns, 300 and 200. Discount, 150 and 280. Balance brought down for debit side, 22,560 naira. Credit side, 22,560 naira. So the balances are equal. Therefore, the balance sheet is correct. Stock,
Yes, mommy.
stock at 31st December 2002 is 2,550 naira. I'm done.
Yeah, so Frank, thank you very much for the question, reading the question. So the point is that to prepare the profit and loss account, we need the gross profit. We'll add other income and less expenses. But as it stands now, we don't have the gross profit. So it means that we have to prepare the trading account, okay, to get the gross profit or loss before we can prepare the profit and loss account. Okay, so I'll give you 5 minutes to quickly prepare the trading account to determine the gross profit, since we have done that already. So you only pick the information you need, right? Sales, return invoice, purchases, those things. So 5 minutes, please. Let's get the gross profit. Start work.
So can we cross-check if the gross profit is
Okay. Let's do
4,003?
Okay, then let's do that. So like we had to prepare the trading account. So normally if you are given under exams condition, you have to prepare the trading account before you can prepare your profit and loss. Okay, so the obvious okay, let me put the currency. So this is Naira. So the first item is sales. We have returning was in the question, so we'll put the sales 9,000 at the second column. We less the returns inwards. So return inwards here, the question stated them as returns with one at the debit and one at the credit. So the one at the debit is the return inwards because return inwards has a debit balance. So the net sales, oh, I think I've misplaced my. Okay. So 9,000, then 300. So the net sales will be 8,700. Then we go on to the cost of sales, beginning with the opening stock, which is 5,000. Then we go for the purchases. There is return outwards and carriage in, so we have to put it here, 2,000. We less the return outwards, and then we'll add the carriage. Return outwards is 200. Carriage inwards is 150. So our net purchases will be equal to 2,000 plus carriage inwards of 150. Minus return outwards of 200. So these are net purchases. We add it on to the close opening stock to get the cost of goods available for sale. So we have 6,950. We less the closing stock. Closing stock we're given as 2,550. Then do we have any trading expense? The answer is yes. We have wages here. So when we get the cost of goods sold, we'll add the wages. So the cost of goods sold is 6,950 minus 2,550, 4,400. We add the wages of 120. giving us a net cost of sales of 4,520. So we now get our gross profit by lessing it from the net sales, and we'll get 4,180. So what happens? 200 is missing in the picture. Oh, I think it could be this one. Let me do the net purchases again. 2,000 minus 200 plus 150. Wow. Okay. So Frank, check your solution and let's see where we differ.
Yeah, so it was my purchases.
Your
Yeah,
purchase.
net purchases.
Okay, you didn't
Yeah,
less the
no
return outwards. Okay. Okay. So Prof. Alexia, I guess you also have to check your figures and see. So I shouldn't have trusted the figures. Anyway, no problem. So it's good that we had to do it together. So Prof. Alexia, your gross profit should be 4,180. So check your figures and let's see where you had a different figure. Frank has been able to determine that he didn't let the return outwards. Okay, so check it and then fish out the error. So if you have your gross profit, then you can now prepare your profit and loss account. So you have your profit and loss account for the year ended 31st December 2002. So the first thing you bring is the gross profit, which you have determined in the trading account. But of course, your currency should be in. So Naira. You lose marks if you don't bring your currency. So please, anytime pay attention to that. So we begin with the gross profit, which is 4,180. Then as the format suggests, you add other income. Okay, so you add other income. And please, per the sheet I showed you, your other income is discount received, which is the very common one, commission received, rent received, interest on investment. And the clue is that these items have credit balances. Income has credit balance. So you check the credit side of the trial balance for these other income. So let's see if we can fish them out. We have, this is sales. We have already used sales. It's not part of the other income. Capital. Capital is not an income. It is a capital receipt. So take it to the balance sheet. Loan from bank. Loan is a liability. Creditors liability. Return outwards, you have used it. So you see the last one, which is the discount received. Discount received. So discount, it's only that one. So 280. You add it to your gross profit. So if there was others like commission received, rent received, you add all these things to your gross profit to get the total income. Total income. So after getting the total income, you less all the operating expenses. Now, Another clue with this one is that your expenses have debit balances, right? So if you are looking for expenses, you look at the debit column of the trial balance, but make sure you don't pick an asset, okay? Because the asset, capital, and liabilities, like we discussed from yesterday, they will go to the balance sheet to show the financial position of the business. So let's go through the figures one by one and see which ones will fall for our expenses. So you have stock, no. Purchases, no, you have already used it. You have rent. So rent is the first expense. Wages, you have already used it in your trading account. Telephone expense, yes. Carriage invoice, we have used it. Interest on loan is an expense. The next item, premises. Let me ask Prof. Alexia and Prof. Frank. Premises, is it an expense? I think Prof. Alexia, you would type in the chat first before Frank answers. So premises, what is it? Is it an expense? If not, what is it? Okay. It's an asset. Thank you very much. So premises is a fixed asset, right? It's like a form of a building. So we'll not take it to the profit and loss account. It will go to the balance sheet. Shop fittings. Shop fittings is also another fixed asset. Okay. Debtors, we all know debtors to be current asset. Then carriage outwards, delivery expense. So we saw that even in the examples that we gave, is an expense. Then you have bank. Bank is an asset, current asset. Cash is a current asset. Drawings will go to the balance sheet to be deducted from capital. Okay. Then return inwards, we have used it, and then finally discount allowed. Okay. So if you appreciate the list I gave you, at least you get the most of the expenses. So the first one we saw was the rent. So rent, you put the figure here, 600. The next one was the telephone. Telephone was 260. After that, we had the interest on loan. Interest on loan was 100. Premises shop fittings, no. Debtors, no. Carriage outwards. Carriage outwards, 180. Bank and cash, no. Drawings, no. The last one is the discount allowed of 150. So you see how it is. You now add all of them and get your total expenses. So the total expense will come under the total income so that you less to see whether you have a profit or loss. Okay. So Alexia has also seen that error she made. That's great. Now let me tell you that this topic, you see, cuts across most of the topics you'll be doing from now until you complete SHS, right? It is very dominant in some of the topics. So take your time, no need to rush. Take your time, study the format, understand what you have to take to which account. Very, very important, okay? Okay, so let me add all the expenses and see how much we'll get. We'll get 1,920. So we'll less it from the total income. And I think this time the income is more than the expense. So we are going to get a net profit. So a net profit of 3,170. And that is your final figure. Okay. So that is the profit and loss account for you. It's also very simple. But the point is that you have to know what the expenses and the income are. Otherwise, you'll be picking the wrong items in there. Okay. Now, as we move on, we begin to know the specific items you have to take to the specific account and statement. So in the next session, we'll look at the balance sheet, so that when you are given the question, you can be able to identify that, oh, these will go to the balance sheet, this will go to the trading account, this will go to the profit and loss account. But as it stands now, I want to believe that you all appreciate that sales, purchases, stock, opening stock, closing stock, returning was, those items will go into the trading account, okay? And then your profit and loss account will pick your income and expenses like discount received, commission received, investment income, then for expenses, rent and rate, telephone, those things. Then your balance sheet will take the assets, whether it is fixed or current, your liabilities, whether it is current or long-term, and then capital. And you know, drawings is always adjusted to capital. So drawings will also go into the balance sheet. Okay, so you have to know those things. You have to familiarize yourself with those things. The balance sheet will take the assets, liabilities, and capital. Your profit and loss account will take the other income and expenses. Your trading account will take your sales revenue and your cost of sales. Okay, so I believe we are good. So we have 5 minutes for this session to end. We can take a water break and we'll join the last session to finish or look at the balance sheet and its format. Thank you, professors. I'll see you in the next session shortly.